All right, guys. Well, welcome to this evening's call. So just kind of remind you, I think we got a couple James being new tonight. So just kind of remind you guys what the standard it's all about. It's not a chat, it's not a group meet. It's a movement built on four pillars to change how men view themselves moving into the future and changing it for generations forward. The first pillar being mindset. Let me share my screen real quick. First pillar being set. There we go. So how you think, how you respond, how you face adversity, mindset is the difference between spiraling and stepping up. Then we have finances, which we worked on last week. It's not about being rich, it's about responsibility, stability, leadership. Your money habits reflect your self-respect. Fitness, it's not to look pretty, it's to be strong enough to lead your family, to build discipline, energy, and confidence. Lastly, brotherhood, men you can trust, men you can tell the truth with, men you can carry the weight, not judge. And that's what I loved most about the shares that we just had. Levels of vulnerability, wins that we get to celebrate, those gratitudes. That's what this call is really about, that community that we're building here, and appreciate all of you guys being on and watching as well. So tonight's call is about finances. This is definitely something you want to probably take a couple of notes on. Not like a super heavy note taking, but definitely a couple key things. I'm gonna help you guys kind of start some stuff as well if you've been holding back on starting up your investment journey. Something I want to start with is your wealth is shaped by the mindset of the people you hang around with. And Robert Kiyosaki, who wrote Rich Dad, Poor Dad, stated that. And tonight is about pillar 3. It's going to be building financial freedom quietly, consistently, and without a lot of overwhelm. Because I feel like finances is probably the thing that we get most internal about and have the highest emotions about as well. And we would just put a lot of undue emotion, stress into things. And if we just button up some systems, instead of having stress, you're going to have a lot of joy. So to start tonight, guys, I want you to grab your journals and I want you to answer this quick prompt. It's a simple one-word answer, but growing up, money meant blank in my house. So growing up, money meant blank in my house. A little bit of a reminder from our last finance call. Did your belief create fear or confidence? Do you spend to look successful or to feel secure? Or do you save to grow or to avoid pain? So like kind of starting at that core root. Money was probably the biggest stressor for my entire family. My parents lived paycheck to paycheck their entire lives. My dad didn't have a penny to his name when he passed away. My mom was kind of in a similar situation until I took control a little bit of her finances and started helping her invest a little bit. What did money mean to you in your household growing up when you were kids?
It's kind of funny, but growing up, money meant ask mom in my house because my dad is like he's actually good with money. Anytime we would go to him, he would be like either no or like let's think about it. But anytime we would go to my mom, it would just be like yes immediately. So it was always just like always ask mom, just always.
And then Jeff, I saw you come off mute.
Yeah, it meant fighting in my family.
That's pretty much.
Yeah.
Right there.
We have similar parental responses to money.
Yes, you and I grew up in very similar environments with that type of. I felt like the only time there was heavy stress in our household was revolved around money. I feel like that's a lot of people's households as well. So it's really cool seeing some of you guys resonate with that. Now, think back to when you were a kid, but now as a grown adult, did that belief create fear or confidence going into your adulthood? Do you spend to look successful or to feel secure? Or do you save to grow or to avoid pain? So there's some simple questions there that you guys can ask yourself. Do you have something, Jeff?
Yeah. When you're asking that question, when I entered adulthood, I completely avoided my relationship with money. I pretended like
I know
it. You're fully aware of it, but they're not.
I appreciate you sharing though. No, yeah.
I said, oh, hey, there's money in my account. Let's go do things. There was no planning, no concept of planning, not up until about 5 years ago.
Yeah, I remember trying to teach you a bunch of stuff and you were just like talking to a wall.
Yeah.
So I'm really glad that you've grown up and you're starting to appreciate that a little bit more. So thank you for your sharing, buddy.
Aaron,
now yep.
Could I share something quick?
Yeah, go ahead, James.
My stepmom was in the room, so I don't want to say this out loud, but money's kind of been a stressor my entire life, which granted has not been nearly as long as the majority of you guys, but my parents got divorced when I was 5 years old. So obviously divorce costs money. And then there would just be things coming up left and right. My dad would be worried. And I didn't know this when I was 8, 9, 10 years old. My dad and my mom both told me recently, they'd be worried, like, am I going to be able to get the boys Christmas presents this year? My mom, I remember my stepdad got sued for something related to his daughter, got in a really bad car crash, which cost a lot of money. Almost all of high school turned into, are we going to be able to pay for James to go to school and things like that? So I was talking to this guy, Alex Funk, who Aaron knows, and I'm sure a couple of you guys know who he is. Him and Aaron both really helped me. I started working when I was 16. I was conscious about saving money, but I was also kind of like, and I'm sorry, I forgot your name. Is it Jeff?
Yep.
I was kind of like Jeff, where I would collect the paycheck. And I'm like, all right, time to go have fun. So I was super inconsistent about saving it, but this last year, especially, definitely invested into my future a lot. And now I'm paying for school almost like, I'm paying for half of my schooling on my own and everything. Aaron's definitely helped me revolutionize my finances for years to come, hopefully.
No, I appreciate you sharing, James. I remember you writing a check for your tuition in July, and I was like, that's so awesome. Already starting a Roth IRA as a 19-year-old. It's incredible things you're doing as a young adult. Keep up the great work, buddy. The biggest thing I want to start with tonight, and this is probably going to jot down as a reminder, is a lot of wealth building starts with a lot of unlearning. If your belief system is unhealthy, your portfolio and your investments will be as well. This is probably the biggest thing I had to work on when I was like James's age or Eddie's age. Is I was the family where like money didn't grow on trees. The guy driving the BMW is a dickhead. I never wanted to grow up and be the asshole or the piece of shit, or that my mom would constantly talk about. She had this very negative worldview of money. Something that I've learned a lot, and a couple books I can, one book I can just recommend if you're in that mindset like I was in my 20s. Actually, I'll give you two. Think and Grow Rich by Napoleon Hill, one of the greatest finance books you could probably ever read, just the psychology of money. And then The Entrepreneurial Roller Coaster by Darren Hardy is another really great book to handle a lot of the money stuff. And one that helped me with a lot of technical stuff was The Wealthy Barber. That was a goodie but an oldie that I read about a decade ago that Kyle pretty much forced me to read when I was trying to start getting good with money. If you do have those unhealthy habits with money, which it seems like a lot of us definitely have those, you got to start unlearning a lot of the bad habits before you can start creating the success that you want to have. I want to go over a few myths that a lot of people tend to have about money. And then I'm going to teach you guys some technical skills to actually start building wealth. For those of you guys, you're probably in a much better spot than, a lot of us. And, there's some older people in here as well. So there's different levels of, we got 18, 19-year-olds, we got people in their 20s, 30s, 40s, 50s. So it's great that we got a whole age group here. There's going to be something for everybody. I tried to tailor this for all age groups. If you're already a millionaire, or if you're still struggling, you're going to have some great stuff here. So I find that there is four myths about money. The first one is I need to learn a lot before I invest. The truth to that myth is that overthinking keeps more men broke than ignorance. And Tony Robbins mentioned in his book Unshakable, showed that beating expert investors is almost impossible in the long run. Like if you guys try, 99% of them are going to fail. In fact, 95% of hedge fund managers don't even beat like the index funds of the Standard & Poor's, the S&P 500. So you can be the greatest hedge fund manager in the world. Unless you're like Warren Buffett, you're probably not going to beat the market most of the time. So you don't need as much knowledge, more of just getting started. The everyday investor who just buys consistently is going to win over the person trying to time the market all day and every day. You don't need to be right. You just need to be consistent. Myth number 2 is I need a lot of money to start investing. And this is kind of like my big hang up for a while. You don't need $10,000. You don't even need $1,000. You just need $5. It's not about the amount you're putting in. It's about the habits that you're creating. You being one of the younger guys on the call, right now, you're probably not making as money as you are in, 10 years when you're like almost 30. So, but the habits are going to stay the same. So, James, you're making a decent income, obviously, as a college student. You're doing a really good job investing. But when you're making like $200,000 a year in a decade and a half, you're investing the same percentages. It's just drastically higher because you're making obviously a lot more money in the long run. Even if you're making like $100 a week, just saving $5-10 can create that habit. And it does add up over a period of time, believe it or not. Myth number 2, wealth is built with small, boring deposits repeated long enough to become powerful. Remember the law of aggregational gains that I've been talking about over the last couple of weeks, especially with fitness and everything like that. Myth number 3, this tends to be on a lot of people's minds, especially right now with the way the economy is at this moment. The market is too risky right now. The truth is, the market has always been risky in the moment. But Warren Buffett's rule, this is a great tip I would recommend jotting down, is time in the market beats timing the market. Risk isn't investing, risk is in waiting. And then myth number 4 is I'll start when I make more money. This is usually most young adults, especially in their late teens, early to mid 20s. This is my kind of mindset a lot before I really learned this at a high level. But you're not going to suddenly become disciplined when you earn more money. If you can't invest a little with a little, you're not going to invest a lot with a lot. A raise doesn't fix bad financial habits, it just funds them. It's kind of like that lifestyle that people get caught up in. Nick, you get like this, $30,000 raise at your job, but instead of like downside, like keeping what you have, I need to get the new car. Oh, I need to get the bigger house. I need to get the bigger toy. I need to go on the bigger vacation. The secret of wealth is most wealthy people don't show off their wealth. That's how you actually become wealthy. The guys buying the fancy cars or the designer handbags, I'm talking about women too. This is not just a men thing, but they're just showing off their wealth. And it's called keeping up with the Joneses. If you guys have ever heard that term before, I'm buying things to impress people I don't like. I find that's more Gen X and boomers, their generation where they struggle with money, like Gen Z and millennials. We tend to just credit everything and drown ourselves in credit debt and student loan debt that's going on a lot right now in our society. To give you guys a little bit of my story with this, I knew nothing about money growing up. I knew nothing about investing. I saw a little bit here and there, but when I really started learning investing and learning about money, it was when I actually started with Vector when I was 21. Kyle taught me a lot of that stuff when I was 21, 22, 23 years old, when I was like a representative starting out, my first couple of years running my own office. And my dumb self just never listened to anything he said. I pretty much did what a lot of you guys mentioned earlier. I would get my money and then, I got all this money, let me go play with it. I actually remember when I came back to Vector the second time, I was living with one of my buddies who came back as well. And I was like, dude, I just got this massive check tonight. Some girls, tell them how much money I made. And it was just like the dumbest thing I think I've ever done in my entire life. And he started like, oh yeah, he's going to buy you a drink. Just like self-sabotage myself, but being a cocky asshole, frankly, and not having the right mindset going into it. And I made a lot of really stupid decisions when I was younger. And I'm hopefully going to help a lot of you guys not make some of these dumb decisions as well. This is an open room. And Jeff knows this. I got scammed a couple of times when I thought I was like, this girl's amazing. I sent her like $3,000. It was like the dumbest thing I think I've ever done in my entire life.
That was good.
And like 2 years, like when I was doing 75 hard, like I thought I was like the king and nothing was going wrong. Like I felt like I had Midas's touch, everything I touched just turned to gold. And I found this crypto investment thing and I threw $1,000 in it. They pretty much got me. This makes me want to vomit. I lost $6,000 doing that, essentially throwing it into a crypto scam. So I was making really unwise decisions and I didn't have systems in place to help me create a lot of these wins. I first started investing. I remember investing in penny stocks, which is probably one of the worst things you can do when you start investing. And, I caught a falling knife. If you guys don't know what that means, pretty much it drops 10%. And I thought it was going to go back up, but nope, kept dropping 10 more percent. And I kept buying it day after day. And I eventually lost $12,000 just doing that. So I made a lot of mistakes with money. And I want to help you guys try to not make as many mistakes as I have. Obviously, you're always going to have your wins and your losses, especially when you start learning how to invest. You're not going to time everything right. You're going to have some losses here and there. When you start investing, it's almost like you're paying a tuition to the stock market, trying to learn a little bit. I'm going to help you guys speed up the learning curve so you don't have to get the stock market as much of those gains as you want. So, don't get into the bought into a hype of a weird meme crypto coin, and penny stocks. Those losses eventually become your education. Those losses remind me not to make those stupid, idiotic mistakes ever again. And it's definitely not made any of those stupid mistakes ever again. So, sometimes you got to learn the hard truth, be able to like really pull yourself up. We've all been in that situation before, whether it was with money, family, jobs, that kind of stuff. But the final truth for you guys, you don't need the perfect investment. You just need the first one and get started. I'm going to give you some real strategies here, and I want you to pick the strategy that works for you. I'm personally a guy who loves stocks and investing. I do a lot of research on the stock market, so I like to pick individual things. If you're not somebody that's going to research the stocks or anything like that, I'll also give you some very simple systems of investing in index funds. There's also other forms of investment too. I know some of you guys thought Alex Funk was going to be on tonight, but I'm actually trying to get him for next month. He's going to be teaching some real estate and some Airbnb hacking and stuff like that. So he already said he'd hop on. I just got to pin down the date with him, but I'm definitely going to get him on for the next finance call, either in January or February. I also know people way better at stock investing than I am, like, Kyle Freeman. So I'm probably going to have him on at some point. And, there's other strategies you guys want to learn about. I know, Phil, I know, Justin Donald, he does a lot of the trailer park stuff. I don't know everything, guys. Some of you probably have some great strategies for yourself and you're making some really good money moves on your own. So that's why we have this call, so we can put our brains together and help each other out. The first thing, this is probably something where you guys take some notes on now. And this is where we can start helping you create some like simple strategies. So step number one is just pick your platform. So I think people get too confused about the actual platform they're using for investing. If you want something simple without a lot of technicalities, just get Robinhood or Cash App investing. Robinhood, especially if you're on Gen Z, is probably the greatest tool for investing. And that's probably the simplest and easy way. When Robinhood first came out, it didn't have a lot of the features that it had. Now it has retirement accounts and all this kind of stuff. So you can almost put everything right into Robinhood if you really wanted to. And they have some really cool features that you can use as well. They have a gold feature where you can get 5% interest on your savings and stuff like that. There's a lot of cool features with Robinhood. It's also on your phone, so it's very simple and easy to use. Now, I know myself, I think Robinhood is a little too gamified for me. So I tried it out and I was like, I'm going to lose money really fast doing this. So I just kind of know myself personally. For some of you, that's probably a really great app to be able to use. For those of you guys that want more like long-term retirement, I typically use it. I use Fidelity. There's Vanguard, Merrill Lynch. Every bank has an investment type of account. Use the one you're more comfortable with. That's one I like more for like long-term investing, because Robinhood doesn't have like 529Bs, which are for like childhood savings plans for college. It doesn't have everything that a brokerage might have. If you want research and data, TD Ameritrade has a really good platform. E-Trade has a really good platform. Fidelity's added a lot of stuff recently. So there's stock charts and everything like that. I'm not going to teach stock reading tonight. That's a more technical skill set. If you want to, I've done a lot of research on it, but it's definitely not my strength, but how to read charts and everything like that. So I'm going to teach you guys some very basic and simple things, but just pick the platform first. If you don't have an investment account, just open up one tonight. It literally, like, the biggest hang up that most people have about investing, guys, is they think it's just too complicated. Nick, it's literally like opening a savings account. You ever gone on bankofamerica.com and open up a new checking account or something like that? It's as simple as that. You go to Fidelity, Robinhood, Vanguard, or Merrill Lynch, and just like, I want to create an account. And there's different accounts, but I'd recommend you guys start with a Roth IRA. A Roth IRA is a taxed income as it goes into the account. It's not taxed as you pull it out after retirement. I don't know what the interest rates for taxes and stuff are going to be in 30 years, but I don't need to worry about it in my Roth IRA because I can pull it out and I won't get taxed on it. You can max, I believe it's $7,000 a year that you can max out your Roth IRA. They keep bumping it up every few years or so. It was like $5,500 when I first started. And then you can you can contribute to that Roth IRA for this current year until April 15th, until a tax day of next year. So I haven't completely maxed mine out quite yet. $7,000 for 2025. Yeah, I thought that was it. Thanks, Phil. So that's the biggest thing that I attack before I attack anything else, because frankly, it's just going to grow tax-free for decades. Charles, when I retire and I'm like 62, I can pull all that money out and it's not going to have capital gains taxes on it. $7,500 for 2026. That'll be beautiful. I love how the IRS just keeps raising it every year, so you can just save more money. Now, there's two rules of the Roth IRA, guys. You cannot pull it out until you are retired, unless there's two things. Number one is a down deposit for your first house. You can take up to $10,000 for your first house deposit. And then you can also use it towards your kids' college education if you wanted to as well. If you take it out early, I believe it's taxed 10 to 15%. But
Actually, I learned recently that's not true. You can pull it out whenever, apparently.
Yeah, it's just taxed at 10%.
It's not taxed.
Yes,
I don't know what happened. All right, my bad. I didn't mean to interrupt.
Well, we can research it, but we can do a fact check after, like Dax Shepard likes to do. But I believe you only can take it out for a house or for your kids' education without a penalty.
I would say Trump's definitely going to want that money if you're pulling it out early, Nick.
Yeah, so I'll double check that on my end, Nick, for you, but I believe that is the rule for a Roth IRA. All right. The second step with this, guys, once you've picked your platforms, if you don't have an account open right now, write down the platform you're going to use. And I'm going to challenge you to do that tonight or tomorrow morning. Most of you guys probably already have an investment account opened up, but if you don't, for some reason, just start that as soon as possible. Do it tonight or tomorrow. Stop waiting. Most people say start investing today, but start investing yesterday. So I wish I could invested a decade ago, before I did all that. Carvana is a really good stock right now too, Eddie. Yep. I'll kind of go over some shows. That's my next strategy. So step number 2 is, again, pick kind of your goal, not your age. So if you want freedom later, that's what like Roth IRAs and 401ks are for. Those are for more retirement than for like, short-term savings. So, once you open up a Roth IRA, have the mindset of not touching that for many years. And I'll tell you right now, Eddie, once you have a few $100,000 in your bank account, it's really fun watching it grow every single day. That's one of my favorite things to do right now. I will admit, when you have really bad red days, it doesn't look as fun, but that's not about timing. It's about just the habits that you're creating. Now, if you want to have some money to work sooner rather than later versus retirement, a brokerage account is something you'd want to open up. So you guys know how when you open up a bank account, you can have a savings account and a checking account. They're just 2 separate accounts. A Roth IRA would be like a separate account, and then a brokerage would be a separate account. A brokerage is not for retirement. So that's kind of like my emergency fund that I use. As an example, June was stressing out about money a little bit last week. I handle all of our investments. She kind of handles the day-to-day stuff. So I have more of an aerial view of everything where she doesn't. So she freaked out a little bit last week. Account was a little bit low, and she was putting a lot of emotion into her bank account. And I was like, honey, we have hundreds of thousands of dollars. Just tell me when we need to pull money out and I'll pull it out. I just pulled out like $3,000 to put it in the account and make her feel happy. And just so she felt whole as a human being and wasn't freaking out. So that's what I use my brokerage account for, is for like, if I have random freak emergency happen, my car breaks down, or like June's brakes needed to get replaced a couple of months ago. I use it for stuff like that. I also use it for like long-term savings for like, bigger purchase, like a home, stuff like that as well. What's also cool about a brokerage is it's not just a savings account. You can buy stocks and watch your money grow doing that as well. It's like a bank account that you can invest in. The next one is, if you guys want to like learn and build some skills with actual stocks, start a small stock portfolio. You're like, this is actually what my boss Kyle did. Like he has like a Fidelity or E-Trade account where he handles all of his long-term investments. And then he started playing with Robinhood. So he like threw $1,000 into it and it's like, what can I do with this? He started learning a lot of the features of that, and, started using that as kind of his play money a little bit. So like you guys can set up multiple accounts. So, you can set up your long-term savings account for your retirement. And if you want to use Robinhood for I think that's what I'm going to do. If I use Robinhood, I'll throw a couple $100s in and play around with it. I'm not going to put my whole life savings into it because I just, again, know myself and a little too gamified for me to be able to do that. But at the end of the day, your age doesn't decide your plan, your goal does. I'd be more than happy to sit down with you guys one-on-one to help out with this if you need it. That's what financial advisors, a lot of those people, are out there for, can help you guys build some stuff right there as well. I'm not a trained, licensed financial advisor. I'm just giving you some of my learning stuff. Now, step 3 is choosing a strategy. So I'm going to give you guys a couple of strategies here for pick the one that you like. So the first one would be just kind of like a set it and forget it type of strategy. So this is for people that don't want to do research, that don't want to do a lot of time in the market, that don't want to like just know about individual companies or anything like that. So what you do is you just buy index funds that follow the S&P 500 monthly and auto invest. Just don't be that person that's looking daily. It's going to grow slower than if you bought individual stocks, but it doesn't have as much of the downside risk of buying an individual stock. Core, we've had to do a buyback or something today, and their stock sank 10% just because of that. Your whole account isn't dependent on one stock. An index fund is a fund of multiple companies all at once. So like the S&P 500, which many of you guys probably know what that, you've at least heard the term before. It's a Standards and Poor's index. It's the most tracked index fund in the entire world. And over the last 100 years, James, it's gone up on an average of 10 to 12%. Yes, there's been some dips like in 2008, the dot-com bubble. There's always going to be crashes at some point. That's just how the market works. But over the long term, it's just gone up like a slanted hill. If you invested $100 a month at the same time every single month, which I'll teach you guys about a little bit, that's called dollar cost averaging, you're going to beat 95% of the market in the long term. You don't have to do any stock picking. So if you don't want to deal with stock picking or anything like that, that would be the strategy I recommend. That's what I have my wife on. I invest her money into index funds every month and I don't worry about it. It's automatically set up. A couple of funds that I could give you guys that kind of follow the S&P 500. SPY is the biggest one I use. It's kind of just SPY. Here's a couple other VOO, SPY. You guys can kind of read the acronym. Those are just ticker symbols. It's just like the symbol for the stock. If you guys don't know what a ticker symbol happens to be. So that's strategy number one. That's what I believe the majority of people should probably be on, because most people don't know anything about the market or investing or anything like that. That's kind of like investing for dummies. Anybody can press a button. You can do that every month. So, that's probably the simplest and easy way to start. If you haven't started any investing at all, that's the place I would start. And I encourage you to have at least $10,000 in that until you start stock picking and picking random stocks here and there. Kyle says $100,000. I just think that's really aggressive, especially when you're young. But the reason why I say doing that, Eddie, is before you pick individual stocks, you already have a nice nest egg that's going to keep going up over time. So if you do get hammered on one stock, like, you still have your nest egg growing that allows you to take shots without like feeling like terrible. Now, strategy number two, this is the strategy I like to use a lot. I do a mix of strategy one and strategy two. I do index funds, but I also love to stock pick. It's something that I love enjoying. It's something that I enjoy and do every day. This is for people that want to learn the stock market. I'm going to give you guys 3 tips for this type of strategy. Tip number 1 is buy companies that you already use. When I first started investing, I'm a bit of an Apple freak. I have a whole Apple ecosystem. So when I first started investing, I just bought Apple stock. I've been paying Apple hundreds of dollars and thousands of dollars for years, and Apple started paying me. I bought a lot of Apple stock when I first started investing because I didn't know a lot about it then. I remember when Kyle said, when Facebook goes public, buy the hell out of that. I did that too. That was a good strategy. The AI trade is really hot right now. So like NVIDIA, AI builders like CoreWeave and Nebius and, Oracle and stuff. Those are all like, again, I'm probably talking 4 languages to some of you guys right now, but it's kind of like stocks that you love and use every day. Those are great like picks. Another strategy I say with that, guys, pay attention to college students. They tend to have a grip on what's coming next. So James, if TikTok ever goes public, guess what I'm doing? I'm buying the ever living hell out of that. Just like when Facebook went public about a decade ago. College students track a lot of the upcoming trends. I love how I'm in a vector office because I'm around college students all the time. So I can figure out what that 6-7 thing was like a stock. I would have bought the hell out of that. By the way, Phil, if your kids ever do that,
Embarrassing.
do 8-9. If they ever do 6-7 to you, do 8-9.
Stop.
I found that one the other day. Just get them out of their loop. All right, so that's tip number 1, is buy companies you already use or like, or follow trends of college students or young adults. Tip 2, do not buy a company unless you can explain it in 1 or 2 sentences. If you can't tell me what the stock is, James, don't buy it, because what the hell's the point? Like, you're buying in something you know nothing about, and you're bound to lose money when you're doing stuff like that. So that's my second tip with that. And then tip 3 is just add a little every month. Do not go all in on a stock all at once. So like, James, you got $5,000 and you want to buy one stock, don't throw all 5 of it at once. Throw like 1,500 and then 1,500 and then just add it over time, because there's going to be dips and ups and downs. I remember when I bought Apple the first time, it dropped 7% the next day. I put everything into it. So I didn't have any powder to throw at it and average down a little bit. I buried myself a little bit in 2022 when the market crashed for just investing in stocks. I held them a little bit too long. Think about companies like Apple, Costco, Chipotle. I remember Nick's obsessed with Costco a little bit. So I bought a bunch of Costco a couple of years ago and held on to that. Just buy things that you enjoy and love and use every single Starbucks, Tesla, those kind of companies. And then strategy number 3, this is more of a strategy if like in your 30s or 40s. A lot of investing as you get older is about not so much growing your income, but protecting it. Like what Kyle does right now, he has millions of dollars. So he set up a family trust. He does more dividend stocks now. He doesn't take as many risky shot. Phil, you're probably in more of a similar situation to that point now, where you're trying to more protect your money versus like grow it exponentially. It's still going to grow, obviously, but you're trying to limit the downside as much as you possibly can. If you guys don't know what dividends means, it's essentially the company pays you money for owning their stock. They usually do it quarterly or once a year. I know NVIDIA does it every quarter. I know Apple does it every quarter. There's a couple of companies that do it at the end of the year as well. Think about companies like Coca-Cola, Johnson & Johnson, Procter & Gamble. It's usually those companies that have been around for decades that have had sustained success for a very long time, and they just pay their shareholders more money. for owning their stock and keeping it long term. But essentially what dividends are is they're rent checks without tenants. So like, Eddie, when you're 65 and you've got all these dividend stock, they're pretty much just paying you money every quarter, and you can live off the dividend income that you're creating from your investments. Those are the three strategies that I err on the side of doing. I do a mixture of all three, but when you're brand new, pick one and stick with it until you get really good at it. As you get more confident and learn more about the market, you can start adding more strategies as well. My mentors with money have always taught me you don't really need a financial advisor until you've got $400,000 or $500,000 invested. If you know what you're doing, if you have absolutely no idea what you're doing, I recommend an advisor. So it'll probably save you a lot of heartache over the long term. But you guys, the biggest tip I'm going to give you guys with any of those investments, and I mentioned this a little bit earlier, it's dollar cost averaging. So this is how you invest without overthinking or timing. Essentially, you invest the same amount at regular intervals. So either monthly, weekly, or bi-monthly. I do it every other week, typically on the 1st and the 15th of every month. So when the market's up, you buy fewer shares. When the market's down, you buy more shares. So it just works itself out over the long term. That's what I do with my index funds. At the 1st of every month, I'll buy a share of SPY and then do that every month. No matter where the market is, I'm eventually going to make money in the long run with that particular strategy. And you win either way. And Morgan Housel calls this being consistently reasonable beats being occasionally brilliant. So being consistently reasonable beats being occasionally brilliant. Stop waiting for the right time. You don't build wealth with timing. You build it with automatic deposits. And that's the other tip I'll recommend you guys. Set up automatic withdrawals with your bank account or your investments so it's out of sight, out of mind. And that's just the biggest strategy I recommend with stocks, especially when you're starting and you're brand new. And then step 5 is, again, just start building a starter portfolio tonight. So whether it's $50, $100, $300, $300, whatever money you guys have, here's what I kind of recommend for allocation. 50% of it, I would recommend going towards an index fund. So protect your downside and it'll just grow over time. But to give you guys an idea, like Charles, the S&P 500 went up 27% this year. So they're going to have years where they're exponentially higher. If I had no money in index funds, I would just completely missed out on all those gains that I got from the index funds this year. I had some massive wins with individual stocks too. Like Robinhood is a really good stock. I recommend all of you guys buying. 25% should go towards companies you use and believe in, like the Apples, the Costco's, Nvidia, stuff like that. And then 25% should go towards like dividend stocks. Those long-term ones like Coca-Cola, Delta Airlines, those type of things right there. And then turn on auto invest for your dollar cost averaging for monthly deposits. So I'm going to challenge you guys to do something tonight before midnight. Pick your app, select one strategy, and turn on your auto investments. Starting is the win. The market will teach you guys the rest. So money shouldn't control your life. Money should quietly fund the life that you're building. So that's how I have for you guys for this evening. I'll pause and open up for questions if any have any. So if this helped you guys at all tonight, again, please share this with a brother who could use this. There's always somebody out there that definitely can need this. Spread the word and let's build the standard we lead, we love together. That's the standard.